Hello everyone and welcome to today's morning report on Wednesday the 8th of October with me, Richard Perry, market analyst at Handtech Markets. These equity markets in Europe are under pressure again as there's happened to be a flight into safer haven assets, certainly pretty much across the board. US treasuries, Japanese yen and gold all performing well in the last day or so really, and this has come amid just continued signs of slowdown. The trigger yesterday was the disappointing German industrial production number that fell 4%. That's an incredible disappointment there in that number. And also the IMF global growth projections for 2014-2015, which were significantly downgraded as well for Europe. So pressure now on these European indices. Certainly the DAX under significant downside pressure once again, continues to underperform the FTSE on these selling days. So something that you need to bear in mind there. In terms of the dollar, it had been on a 2-day losing streak and under a bit of pressure, but certainly just beginning to find a little bit of support again. But the signs of a reversal are coming through increasingly now. So I'm going to talk you through a few of these FX pairs where you'll see that the dollar is under a little bit of pressure against some of these pairs, and it could be that we're in the early signs of a bit of a dollar correction, but we'll see how that goes. The only real bit of data that we've got to look out for today is the FOMC meeting minutes. That's this evening at 7 o'clock UK time, and certainly the market will be looking for signs of any hawkish leanings in these in the minutes, and just as to how the Fed is going to be dealing with this in inverted commas considerable time, as the wording that it uses to describe the length of time between the end of tapering and the first rate hikes, and how the Fed's going to deal with its data dependency in terms of tightening as well. So a few things to watch out for in the minutes, and that comes this evening. In terms of my chart of the day, the Australian dollar is one of these Forex pairs that is now just forming a little bit of support. This is on the intraday hourly chart. You can see the process of a potential base pattern here, double bottom, that if you actually break above that 88 20 27 say 88.30 mark, you'd probably be looking towards a rebound up towards around about 0.9 big figure. So we could see a sizable rebound, but on the daily chart, you've had this broken downtrend. You've certainly over the past week or so had this had more gains. Certainly the last couple of days has been strong to the upside, but look at these momentum indicators. MACD crossover yesterday, stochastics also now advancing quite strongly, and the RSI also rebounding as well. So a few signals certainly coming through now that suggest that perhaps the Aussie dollar may be in a bit of a basing process, following on from that 7% downside it saw in the course of about 4 weeks. So it could well see a bit of a correction, a bit of a retracement of that move, and a break above that 88.30, or I'm looking for on a closing basis, because we saw a slight peak above there intraday yesterday but didn't close above, and today has just reacted to the downside. So the initial move to the downside has been seen. Now it'd be interesting to see if the Aussie dollar bulls can gain support again and maintain that level that we've got at what is that, 87.25 was the reaction low from yesterday. So if we can hold that intact, then the prospect of this base pattern continues. But as I'll show you in a bit, or through these charts this morning, there is a bit of a theme of potential dollar turnaround going on at the moment. Anyway, I wish you good luck in your trading in the Aussie dollar today, and I will speak to you later. Thank you.